Alright folks, welcome back to the channel. Here we have a very special video where I'm going to be going over the SMT divergence, or the smart money technique, right? So for those who don't understand what this is, let's start by defining what SMT stands for. So SMT stands for smart money technique, right? So smart money technique, or smart money tech for short, right? So what do we mean by smart money divergence or smart money divergence, right? So what do we mean by this, right? So we're going to be using a very specific example today with two particular markets. We're going to be looking at the EURUSD, one of the most commonly traded asset classes in the Forex market, and we're going to be looking at the DXY, right? DXY, commonly known as the dollar index. And so as we know that these are oppositely correlated. So what do I mean by that? If we see the euro dollar heading upwards, what we're seeing is the euro strengthen against the dollar, right? So we're seeing euro strength and dollar weakness. So this is what we're seeing in the markets, right? Now, as this happens, as the euro dollar price increases, what's happening is the euro is gaining strength against the dollar. So typically we're going to see the DXY head downwards, and you're going to see this oppositely correlated fashion between markets, right? So as the euro dollar goes up, we see that the DXY goes down, right? So this here is typically what happens, and this is where there's no divergence, right? So this here represents no divergence, right? There's no divergence here, no divergence at all, right? So where and how does this divergence look like, right? So we're going to be going over a schematic and then a real chart example to back this up, right? So when we see a divergence, what we see is this, right? So if we have the euro dollar again on the left, what we're going to see here on the euro dollar, if I take that away, what we're going to see here on the euro dollar is we're going to see the euro dollar heading higher and higher and higher. So what we're going to see is we're going to see the euro dollar creating a higher low and then another higher low, right? So notice how this higher low is higher than this higher low, right? So overall we see an upward sloping trend line. So price here has moved higher, right? Let's label that higher. So price here on the euro dollar has moved higher. Now we understand that these are oppositely correlated asset classes. These are oppositely correlated markets, right? So you would expect the DXY, or the dollar index, to decrease, right? So you'd expect the dollar index to do this. As the euro dollar goes higher, as this asset class increases in value, the DXY has to go down, right? As we've established, right? As we've already established. But what a divergence does, as the name expects, it does the opposite. It diverges against what we have just outlined. So we're going to see the DXY actually do pretty much the same as the euro dollar, right? So we're going to see price move higher, and this goes against the entire way that the assets are actually correlated, right? Because as the euro dollar market increases, you would expect the DXY to decrease in value, but that doesn't happen. So this here represents the divergence. Again, this is one example of divergence. You can apply this to any dollar cross pair. So you can apply this to GBP USD. You can apply this to US. You can apply this to CAD USD. You can apply this to AUD USD. But here in this video, we're going to be applying it to Euro USD, right? So this here is a divergence in price, right? As the euro dollar increases, we would expect the DXY to decrease, but instead we see it also increase. So this here is an SMT divergence, right? This is an SMT divergence, an incredibly powerful tool that you can use in your trading, right? And here we're going to be going over an example as to how you can implement this on the 15-minute time frame. So here we have the euro dollar, right? The M15, or the 15-minute time frame here on euro dollar, and we're going to be dissecting how you can use the SMT divergence, right? So what we have over here is we have the euro dollar, and we're going to be dissecting two specific days. So we're going to be dissecting Monday through to Tuesday, and then Tuesday through to Wednesday, right? So the 1st, 2nd, and 3rd of April. So let's begin, right? Let's begin over here. So what we've seen over here is we've seen price from Monday, the 1st of April, come down into Tuesday. So what we've seen over here is we've seen a low and then a lower low over here. So we've seen the euro dollar decrease in price. We've seen lower low and a lower low over here. So we've seen a downward sloping trend line. Now let's go over to the DXY, right? We see the DXY just over here, right? So the DXY has done the exact opposite on these days, right? Monday, the 1st of April, going into the 2nd of April, Tuesday, the 2nd of April. So we see the DXY going higher, and we see the euro dollar going lower, right? So this is not a divergence. Let me label that again. This is not a divergence, right? This is not a divergence, right? Because we understand that they've gone in the direction we expect, right? Remember, the euro dollar has gone down, just like this, and the DXY has gone like this. So this is not a divergence, right? You need to understand that. So now if we continue on to the Tuesday setup, which is what we're interested in, right? This is our regular Tuesday setup, right? So notice how we're still going to use the concept of accumulation, manipulation, and distribution to understand how this market is moving, right? So what we have here is that we have an Asian range. This here represents the Asian range. And this is the accumulation of liquidity, right? Hence why we have the dollar signs there. So this here is an accumulation of liquidity. Now let's go to Wednesday, the 3rd of April on the DXY. Wednesday, the 3rd of April is just over here, right? So again, we have that accumulation, which is symmetrical to the euro dollar time frame. So this here represents the accumulation, which is also known as the Asian session range. Okay, brilliant, perfect. Now this is where the SMT divergence comes into play, because what we have over here is we have the euro dollar giving us an upward sloping trend line now, right? We understand we have an upward sloping channel or an upward sloping trend line. So this low over here bounces off this next sort of, I don't like to call it a trend line, but just for the sake of the video, for people who are new to this concept, right? We understand we see a low and then we see a higher low over here, right? We understand we see a high and we see a higher high over here. So we need to understand, following that, we have higher prices here on euro dollar. Right, we have higher prices over here on euro dollar, and we have higher prices over here on euro dollar. So we have higher prices and higher prices. Now, if we go to the dollar index for the same day, what we have over here is quite interesting, because we have the same. Right? We have a low over here, which produces a higher low, and we also have a high over here, which just ever so slightly produces a higher low over here. So what we have over here is we have the dollar index going higher, as you can see by these upward sloping trend lines over here. And we also see upward sloping trend lines over here. So this here represents a mismatch between the two, because we understand the euro dollar has to go down while the DXY goes up. So when they both go up, what we have here is an SMT divergence. This here is an SMT divergence, right? This is what we mean by an SMT, everyone. Understand this, right? It's very important for you to pause the video and understand this visually in your head, right? Understand how the euro dollar in this case and the DXY are oppositely correlated, and understand how they've actually broken those rules essentially of going oppositely correlated, right? So we have a upward sloping channel over here, so the euro dollar has increased in price, but so has the DXY, and this here again is a SMT divergence, right? So from here, once we've identified the SMT divergence, everything goes back to the regular concepts I've gone through many times of accumulation, manipulation, and distribution, right? So what we have over here is we're going to have a bullish day, of course, because we have bullish order flow over here. So what we have is we have the Asian low over here that's been swept. So this Asian low over here, Asian low, if I label this Asian low, this Asian low has been swept. So this, we've seen a sweep of sell side liquidity. This here is a Judah swing, right? It's very important to understand. The Judah swing is the lowest point of the day, right? So Judah swing represents that lowest point of the day. If I label that over here for people, the Judah swing is the lowest point of the day, and it aims to manipulate sellers into the market, right? Falsely entice sellers into the market, right? Giving us a chance to wait for a sell side liquidity sweep before heading higher. So now we see a structural break over here, a shift of market structure over here, coincidentally in line with the Asian high. This is our market structure shift, or MSS. Now that we've seen our market structure shift, right, we understand our job now is to key off a fair value gap, right? So we have a fair value gap just over here. So I haven't zoomed in, but there is a fair value gap just over here represented in blue. And our job as a trader is to simply key off the fair value gap over here. Key off the fair value gap, stop loss just below the Judah swing. And here we have it, a nice 1 to 3 hour trade, or 1 to 2 or 1 to 3, I believe it was. Lots of potential, lots of momentum over here, right? Simply using the concept of the SMT divergence, right? So going back to quickly, let's sum that up. The SMT divergence is when we have the euro dollar, which increases in price, and we have the DXY, which also increases in price, giving us our SMT divergence.